As you look at the closed-end fund landscape, where do you see trends and potential opportunity for investors?
This year we think income is going to be a strong driver of total returns, and in that case we think high yield municipals will be an outperformer for 2017.
Finding strategies that have lower durations or lower interest rate sensitivity will be one. We're already starting to see that with bank loan funds and some multi-sector funds that have lower durations. Those discounts are narrowing a bit because of the demand for those. The other thing that we're finding interesting is there are some products called equity covered call funds, and these are products that go out and buy equities. And at BlackRock, what we do is we write single stock options on some of our equity holdings. So those are two areas that we think are pretty interesting.
In our credit closed-end funds, we've obviously had a large emphasis on below investment grade corporate bonds over the last several years. We think that trend can continue into 2017. We think those spreads still look attractive. From a sector perspective, we're still constructive on the energy front. It's obviously been a really topical sector, but we still see value there. In addition to that, investment grade corporate bonds or higher rated corporate bonds are also look relatively attractive.
An area that I think is frequently overlooked in the closed-end market is residential mortgage-backed securities. This is a very large market. The agency market, supported by the government, is very large and very liquid, but non-agency residential mortgage-backed securities are an area with much greater potential for return. We think that's a great place to invest right now. The reason it's attractive is that the residential market in the U.S. continues to recover. We have seen home price appreciation of 5% or better for several years in a row.
Because of the structure, a closed-end fund allows you to get into some areas that the open-end structure doesn't allow. As more and more people are moving to passive investment strategies, what happens is they're limited to only sort of the very headline stocks, and that gives a chance for retail investors through a closed-end fund to invest in some of these stocks that are below the headline that are increasingly being mispriced.